Good afternoon. My name is Leslie Miller, and I am going to be your host today for the inaugural A&E track of the PortGen 2021. So today's event, we have our first event up is Mr. Donald Lightfoot, David Lightfoot, and he's from Lightfoot CFO Financials. And he's going to talk to you in regards to direct and indirect costs and how to allocate these items according to your federal contract. And since we're all here, we want to make sure that everybody identifies themselves by their full name in your image. And then if you have any questions, feel free to go ahead and populate them in the chat. And then we'll get to the question and answer session after Mr. Lightfoot is done. So with no further ado, I think that we will go ahead and get started. And so with that, I'd like to also introduce Aisha Kadri from the Small Business Transportation and Resource Center, and Jessica Chang, also from the SBTRC, and Andrew Miller, who is with A. Miller Consulting. And if you have any questions about anything, just go ahead and put it in the chat and we'll follow up with you. Sometimes we can do it on the fly, but if it's relative to the presentation, we'll hold those back until the end of the presentation. This presentation will run about an hour, and then we'll do 15 minutes for Q&A. So with that, Mr. David Lightfoot.
Okay, thank you, Leslie. So I'm going to, when I was asked to do this, Jessica and I talked about doing direct and indirect costs, but I couldn't talk about that for an hour. So we opened it up a little broader to talk about direct and indirect costs, but also how to make your company more profitable. Because what I've found in decades of doing this is that when you're profitable, your company is profitable, most of your other financial problems will go away. And so if you can make your company profitable, make your company grow, good things will follow. And so whether it's public works or private stuff, in any case, you want a good, financially healthy, and that means profitable company. So we're going to talk about that, give you some guidance on how to make your company more profitable, give you some insight into reading financial statements, and to help you, reading the financial statements are really the base for making better financial decisions for your business. So let's go ahead. So introductions, we've pretty much done. That's me when I graduated from high school. This is how I look now. On the background, let me see. Oh yeah, so I got that background up. That's me driving my car at the racetrack in very heavy rain, which is not always driving in the rain, but that's my hobby. I'll be doing that this Saturday, and I think we're going to get very heavy rain again. So anyway, the mild-mannered CPA likes to drive fast. So direct versus indirect costs. So this is where we started the conversation, Jessica and I. So let me define what those mean. Direct costs are the costs that go directly into the product or service. So historically, when America made things, the things were direct labor, direct material, and overhead were allocated to the cost of the product that was made. But most of our businesses these days are service businesses. So the direct costs are typically mostly labor. So if you're an architect or an engineer, your cost is mostly going to be the direct labor, the people that provide client services. And probably, I'm guessing for most of you, 80% of your cost base are people or people-related costs. It's the biggest cost by far. Um, Now, the thing with direct costs is they typically vary directly with revenue. So what's that mean? So if your revenues go up, they go up, you have more direct labor typically. Your revenues go down, well, you don't need the people that are working in client services, your direct labor goes down. Now that's in contrast with overhead costs, which are relatively fixed in nature. And so the best example of an overhead cost or an indirect cost is your rent, because you have rent month in, month out, whether you're busy or whether you're not. And so now in the long term, everything's variable, because 5 years you'll be out of your lease, you can shut off your rent on your space, but short term, that's fixed. With variable costs, they vary typically directly with revenue and can be changed and will change on a pretty short-term basis. Why is that important? Well, the cost behaviors matter to you as a business owner and how you make decisions. Because variable costs, if you don't have work, you have to lay people off, quickly, because you'd be paying them to do nothing. With indirect costs, you can't cut costs that quickly. And so how you structure your business, and you have some discretion over what is direct and what is indirect, matters as far as keeping your company profitable. The next thing we're going to look at is a typical income statement. If you're using QuickBooks, they call the P&L a profit and loss. And the proper term is an income statement, but it is awfully often referred to as a P&L. Now, the P&L's got three main sections. You got the top part is revenues. In this case, in my example, it's just $1 million. Simple example, first section. Second is your cost of goods sold, or traditionally it's called goods sold, but for most of us, it's cost of services sold. And that's the things I was talking about. These are the direct costs that this section is about. Direct labor, materials, you infer that is direct materials. No overhead here, but there could be. And so that's your total cost of goods sold. And you get to gross profit margin. So the difference between your revenue and your direct cost is gross profit margin. Now, gross profit margin for most of you business owners is a KPI, a key performance indicator. You need to calculate that. You need to know what it should be. And it is a very, very important performance indicator related to the health and profitability of your business. So if you aren't tracking that in your business, you should be. After the gross profit margin, and in this case, we've got gross profit margin of $490,000. Then we come down to overhead. So these are the things that are relatively fixed in nature. And the big one we have here is indirect labor. So that's our back office. So our accounting people, our marketing people, administrative, management, that sort of thing. They're not the people providing client services. That's your indirect labor, that's support. In this case, total overhead, $430,000. We subtract that from our gross profit margin. We get net income of $60,000 in this case. Here's the same income statement, but now I've added percentages. So 49% gross profit margin, and that is important. If you're a business owner, you want to calculate gross profit margin as a percentage of revenue. Now, I have not calculated the overhead as a percentage of revenue because that's not significant. Overhead is generally fixed in the short term in terms of dollars. So you consider it just kind of a big lump that you have to overcome before you make profit. But gross profit margin as a percentage is important because remember, everything above that gross margin line varies with sales volume. It goes up and down in lockstep with the revenue. And so this is very significant. So you've got variable costs in the direct area, top half of your P&L, The bottom part, or the third part, the overhead, is relatively fixed in nature. And so that's going to be really important in terms of our decision making.
David,
Yep.
would it be possible for me to ask a question?
It's more than possible, it's encouraged.
So you said the gross profit margin, that's a good KPI. And then you also say the gross profit margin percentage, that's important to look at. So if I were to apply for a loan to a bank, is that something that they will be looking at?
Oh, yeah. Yeah. And it's really the gross profit margin percentage that's important. Now, they want you to make just money too, but the percentage you're making is what they're really looking for. And they're looking at that in terms of what's common in your industry. Now, they're also going to look at the net income percentage. That's also as percentage of sales. The gross profit margin, the reason it's so important is because it's your quantification of your value proposition as a business. So what I mean by that is your customers pay you for a good or service, and it costs you something to provide that good or service. In most cases, A&E Track were service providers. So what it costs you to provide service to your customers or clients and what they pay you, that is what they value your service at, the bigger the difference in that, the bigger the gross profit margin. Now, for people in professional services, and I think that's everybody here today, you should be about 50% or higher in your gross profit margins. That would be normal for a professional service business. I see everybody's got their cameras turned off, so I can't see if we got people who are still paying attention, but I'd love to know if, okay, Andrew's come back in front of his nice library. And you're muted, Andrew, but do you know what, well, do you, first I guess maybe I'll ask, do you calculate your gross profit margin as a percentage?
Not typically. Usually I'm running invoice by invoice and all my expenses are already covered and paid. So my accounting is really simple.
Yeah.
And I'm just taking an invoice straight from the client, and the over and under is already said and done before I even get the numbers added to my bank account.
Okay, so so you're not, are you doing a profit and loss statement? Or is
I've
it-
done a couple of them, not on a consistent basis, but I don't run a what do you call it? A conventional business structure. I'm mostly
Okay,
just a consulting company with a client here and there. So
okay, all right. I still think it applies, but we'll see. We'll see if some of this is valuable to you. Tamara, are you still there? Maybe not. Okay, so there she is. Do you do a gross profit margin percentage in your business?
Actually, a speaker for the Port of Seattle, for the professional services.
Oh, okay, all right. Okay, so let's continue on. So your gross profit margin as a percentage of sales is a key performance indicator for most businesses, and in professional services, it should be 50% or thereabouts. It'll give you some ideas of other businesses. For a general contractor, they're typically running about 20%. A specialty contractor, that's especially building construction type contractor, 30%. Software, I've seen as high as 98%.
Wow.
Once you've got software, reproducing software isn't very expensive. And so the margins are really good, but the R&D costs are really high. I've seen employee leasing be as low as 15% gross profit margin, but they're dealing in tremendous volumes. So it varies a lot by industries. Now, net margins, and this, in my example here, I've got a 6% net profit margin. That's a good KPI too for most businesses. That's your bottom line. That's how much money you make. And this is an accrual basis. I see big publicly traded companies below 5%. for small businesses, typically 10% is, you want to see that or better as a threshold. And I have professional service companies, typically 20% at the bottom line. Again, this is 20% of net of revenue. And sometimes in professional services, I see as high as 40 or 50% net margin. That is almost 50% of their sales. So that that's pretty impressive. Any business that can do that kind of margin. And I've seen architects and engineers do it. Not often, but sometimes. All right. So for take,
David, can I ask a question?
yes.
Are there some online resources available, you know, for my company that will give me like the average statistics, you know, kind of like what you were just telling us? Like maybe through the library district or somebody that will give me standards for industries or NAICS codes or whatever?
I don't know of any. There probably are, but a good resource is your banker, because if you talk to a banker, they all have access to RMA codes. That's Risk Management Associates, and that's the bankers organization. And they have they pool their resources, and they have benchmarking surveys by industry. And so they'll give you exactly that, what the margins are that to be expected in each industry. And so your banker is your friend, because that's a paid subscription type of service. And they all subscribe because they're using that for underwriting purposes on their loans. So you should be able to get it from them. My guess is there's some online sources too, but I don't know of any good ones I can refer you to. I've got a publication that's done that has specifically that, and I've found it to be sometimes helpful and sometimes not, based on my experience. So I can't really recommend it wholeheartedly.
Thank you.
You bet. And please pitch in any other questions any of you have as we go along. So the next thing I wanted to do is calculate break even. So if you look at this income statement for this company, do you know how to calculate break even for this company? Because you're a small business owner, you'd like to know what volume you need to do to break even. And so the way it's done is, and the reason this direct versus indirect is so important is because it facilitates the calculation of break even. So what you do is you put in the overhead. I've got it set up on your handout. This is the first tab in the Excel file. And you put in the overhead, because we consider the overhead to be kind of this fixed cost. You can't change it short term. Put in the overhead in dollars. You divide that by the gross margin percentage to get your break-even point. Now, most small business owners, they like to know what their break-even point is, because it's like a security blanket. If you could calculate that on your Excel, or if you printed it off on the paper, I'll give you just a minute and I'll show you the answer. Okay, so you would take the overhead of 430,000, we divide by 49%. The break-even point for this business is $878,000. That would result in a zero net income in dollars. Now, I don't know about you, but I know I'm not in business to break even, and most businesses aren't. You want to make money. So how about if you set a goal, you want to make $150,000 in profit in the year? What volume would it take with this business to make $150,000 for the year? So the hint is you treat that target profit like it's overhead. Okay, and here's the answer. So if we went to overhead and profit of 580,000, divide by the same 49%, because remember, gross margin percentage stays the same, whatever your volume is, because everything's variable, almost everything. And the nice thing is the overhead doesn't change, so it all drops right to the bottom line. If you make another $150,000 at the gross margin line, your overhead doesn't change. So you need revenue of $1,184,000 in order to have a profit of $150,000 at the bottom line. So that is how that is done. Now, question, can you change a fixed cost into a variable cost? Because you see the cost behaviors are different. And from the standpoint of a business owner, variable costs mitigate risk more than fixed costs do, right? Because fixed costs are just fixed, you got to pay them. But variable costs will change with your volume. So the more you could make variable, the less risky the business would be. Anybody have any ideas on how you could change fixed cost to a variable cost? Go ahead and unmute and give me your ideas if you got any.
If you were to replace permanent full-time employees with temporary services as a labor pool.
That's one. Yep, that'll work. How about comp arrangement for your salespeople? Make it less fixed salary and more incentive comp that is commission-based. I mean, once you've got a seasoned salesperson, you can pay them more if they'll do it all based on commission and make it all contingent on sales. They win and you win. And they don't make sales, they make no sales, they get no pay. So that's one way. And there's other ways you can do it, although it's limited. But to a certain extent, you can move fixed costs to variable cost and de-risk your business a little bit. Okay, we're going to play financial consultant, which I play frequently, but you guys do less. And we're going to troubleshoot some companies with poor profitability. We're going to look at their P&Ls and see what they need to fix their profitability problem. So this is audience participation. This is based on a long-term client. The first time I went in their office, about 12 years ago, and I saw a P&L that looked like this. So here they're making $1 million a year. They're losing $10,000, so they're basically break even. And you look at this P&L and they ask, what do we have to change to make money?
Lower the labor.
Okay, that's so. And why do you say that, Jessica?
Because it's a large proportion to their expenses.
Yeah, it's really the only thing that matters, right? It's just, and this is typical. This 75% of revenue is labor, and it's of their cost base. It's about 75% too, and it's the only cost that really matters. But this is a professional service company that has people in professional services in the field and per people in the office. So who do you get rid of?
The janitors.
The what? The janitors.
The janitors.
Yeah, right.
Clean up your own desk.
Yeah, they're the only ones they're the lowest paid people, and you'll get rid of them first. So the problem with this is you really can't get many insights other than knowing that labor is the only cost that matters. And so it's very frustrating. You can't parse it enough to get anything that's actionable.
Well,
So-
couldn't you fine tune each of the lines probably and just try and glean 10% across the assorted items? Like your depreciation, just try and keep a little less turnover on your stock and go in through your rent and try and renegotiate with your landlord and turn off the lights when you leave the office to cut on utilities, etc. Would that be feasible or is that just stretching too thin?
Well, it'll help. The trouble is, based on the costs here, it's not enough to make a dramatic difference, right? Their break even, you want to get them to 10 or 20% net profit. And you can't tell what to do based on this. It's not well organized. So this is where getting good information matters. Here's the same company. After I asked them, split your direct labor and your indirect labor, because I couldn't tell what the problem was. And so usually when somebody's not making money, the first thing I go to is, well, you're not charging enough for your service. Well, I looked at it and I did the usual. We'll talk about pricing professional services in a few minutes, but they were charging enough. And if you look at this, they're making 49%, same as our earlier example. That's about where they should be in professional services. So they're charging enough for their services. Their gross profit margin is good. What's left? Too much overhead, right? In this case, the indirect labor is 300,000, supporting direct labor 450,000. In the actual client example, it was about equal, 1-to-1. That is, they had as much support staff as they had people out making money. That can't work. So what I suggested is you need to cut your indirect labor in half. And they did that, and it didn't make a ripple. All the revenue kept coming in, the clients were happy, and they became wildly profitable and have been for the last 12 years. So that's one potential, here, one potential problem. In this case, they had too much indirect labor. Okay, here's another income statement. I changed that. If you blinked, you missed it. But you look at this one, and what's the problem? This is, again, same kind of business, professional services. Notice the gross profit margin is now 29%. So when you look at this, I look at their overhead and I go, well, that doesn't look too bad for a company this size. But they should be, if they're in professional services, they should be making a 50% gross margin, and they're making 29%. So they got a problem there. Now, it could be a number of things, but the relationship between revenue and direct labor is off here. It should be at least double. The revenue should be at least double of direct labor. Now, it may be they're not charging enough. It may be that their direct labor is too inefficient. That is, the utilization is poor. But something is wrong here in the top half of the P&L, and they need to fix that. They need to get their gross profit margin healthy.
So David, I would think that maybe this particular income statement is reflective of the COVID.
Well, and now why do you say that, Leslie? What are you reading into this?
Well, because, you have this established workforce and you're not getting the revenue that you need. And maybe that's because your target audience is no longer working or open. And, so, in addition to being overloaded on direct labor, your client pool is inflated with, names of companies that are no longer there.
Well, that could be, and that's a good point, because that highlights, if you aren't getting the revenues in, unless it's very temporary, you've got to lay off direct labor.
Yeah.
Because they work for clients, and if they aren't busy, you can't afford to pay them. And so you'll lose money if you do. Now, if it's very temporary and you're going to have work for them soon, then that's another thing. But I mean, that's a good point. If you had COVID, you shut down, the direct labor can't go to work, you're going to have to lay them off. And if it's temporary, the Employment Security has got some good programs. But short of that, you can't keep paying people to not work.
Exactly.
Okay, let's talk about how to price professional services. this will probably be important to you. So as a rule of thumb, if you are, I mean, this is not government contracting, this is private sector, sometimes government contracting. And that is, there are certain rules of thumbs about professional service pricing. The first one is that for pricing out an hourly rate on an employee, it should be 2.5 to 3 times the gross pay of the employee. So if you have an employee being paid $40 an hour, your billing rate for that employee should be between 100 and 120. Now, if you can do better than that, I'm all for it, but that's typically it's 2.5 to 3 times. Now, another rule of thumb is burden pay for an employee. It should be 2 times that. Now, what do I mean by employee or burden pay? So labor burden is the employer share of taxes, benefits, and other things you pay an employee to work for you. Typically, it's between 30 and 40%. We're going to go through an exercise on this in a few minutes. So I've used 30%. So our $40 an hour paid person, fully burdened, if you add another 30%, that'd be another $12. They're $52 an hour fully burdened labor. You want to price them at about 2 times. So that's $104 an hour, in the same range as our 2.5 to 3 times of gross pay, unburdened. Now that's all well and good to have gross pay multiple or burden pay multiple, but there's a third factor that comes into this, and that is the utilization. I mentioned this just a few minutes ago. If you're in a professional service business and you're paying somebody $40 an hour, they need to be billable 80 to 85% or more of their time. Now, I know a lot of businesses work on fixed prices, but the ratios still have to be there. I see clients that have got, you know, their employees are being paid $40 an hour and they're billing 20 or 24 a week. It's not going to work. And they should be really 32 to 34 hours a week out of a 40-hour week should be what they're billable. If they aren't, you need to get it back up to that. Now, maybe you have too much admin time for them, too much training, maybe they're inefficient, but whatever the reason, you've got to get them a certain multiple, and you need to have them, their utilization be 80 to 85% or more. If you do that, if you do all these things on this slide, you will achieve your 50% gross profit margin. So those are the rules of thumb. It makes it pretty simple. I know in government contracting, it isn't that simple sometimes, but you can usually get pretty close to this if you've got a billing rate for the person and you're allowed to charge for overhead as well. We'll get to that in a few minutes too. Okay, so this one on the slide, you're not going to be able to read it. So this is the second tab in your Excel file that you were sent, and this is labor burden. So labor burden are all the things you pay an employee for over and above their gross pay. And some of this is employer share of taxes. Some of it is benefits like medical and dental, and some of it's time you pay them to not work. So how I've set this up is I've got a sample company and then I've got your company. And what I'd like to have you do is fill in for your company what's appropriate. So the first line is 365 days in a year. That's the sample company. That's probably the same for your company as well. Weekends, 52 weeks, 2 days per weekend. That's 104 days that people don't work typically. Subtotals 261 days. From that, you usually have paid holidays. 7's about typical. You could have more or less. So you subtract that off because they're not going to work on paid holidays. And then you've got PTO, paid time off. It could be called vacation, could be called sick leave. A lot of companies use just PTO now and don't make the distinction. This is 15 days or 3 weeks. So probably somebody that's experienced, been at your company a while. So subtract off. So the productive work days, after all that you're going to have them work on your behalf, making money for you 239 days a year. So that doesn't sound like many, does it? So the next thing we take the 22 days from up above, that's the 7 plus the 15, the holidays plus the paid time off. We add it to the productive work days, get a total of 261, and that's from up above as well. And get a ratio of the PTO to the productive work days. So it's basically just 22 days divided by the 239 that they'll work. It's 9.2%. So the other way to think about this is you pay your employees 12 months of the year and they work 11 months. So during those 11 months, they need to cover the costs of their employment and your overhead and get you a profit, hopefully, in 11 months, because you're going to pay them a whole month to not work. It's shocking when you think about it, but that's typically what a business does, is they pay their employees 11 months, or they pay their employees 12 months, the employees work 11. So that's 9%. And so during those 11 months, you need to take that into account. So let's start with a $40 an hour person. The FICA is going to be 7.65. State unemployment, I use 2.5%. Your rate may be higher or lower. Labor and industries, that's per hour. I used $1. Again, your rate could be higher or lower based on your experience. So the gross pay plus employer share of taxes is $45.06. Medical and dental, I've assumed that at $500 a month. That's low. So I get $2.84. So burdened labor in this case is $47.90. Remember, this is a person that makes $40 an hour. And then you have to add the 9% that we calculated up above for all the time the person isn't working. And so now we're up to $52.21. And this is fully burdened labor. This is your real cost. If you are a business owner, this is the real cost of a $40 an hour person is $52.21. Now, why does this matter? Well, first of all, they need to be earning revenue that justifies that cost in 11 months they are working. Second, if you're making estimates to do proposals for future work, you need to consider all of your labor costs, not just the gross pay, not just gross pay plus employer share of taxes, but all of these, because these are real costs. You're not going to avoid them. They are real costs. Now, often I hear people say to me, you know, I make pretty good money on every job, but at the end of the year, there just isn't as much left as it seems like there should be. This is why. There's a bunch of hidden costs that people tend to overlook. And in general, what I find is that business owners tend to underestimate their true costs. For you that are in people businesses, most of your costs are people, and you will underestimate typically the cost of your people. And so keep in mind, do a little calculation like this, and you'll probably, well, get a wake-up call on what it really costs to employ people.
So David, do you actually put the real cost of labor onto your P&L? So then that way it's, you know, correctly reflected?
Most of it. So payroll is going to pick up the employee hourly pay and the employer share of taxes. Monthly, you will pick up your medical and dental. With the PTO, the right way to do it is the PTO that employees earn needs to be accrued in the periods they work. So you accrue it. It's a lot of work for the accountants, but it's the right way to do it. And your payroll service will do most of it. And you accrue that, and it goes into an obligation, a liability. And then when they take vacation, they're sick, you take it out of the liability. It's not an expense in that period. It goes against the liability. So you're accruing and setting up a bank of PTO. So the only thing that typically is not accrued are the holidays. And those usually just get recorded as they happen. So that's off a little bit, but everything else is in your P&L in the period that the people work. The holiday just, it should be accrued, but I've never seen anybody do it. And it would be a lot of work. It's more important to consider everything, the all-in fully burdened cost of labor, when you're making proposals, when you're thinking about what your real costs are going to be on a project. So otherwise you get this leakage in your profit because the stuff sneaks up on you. So for instance, Jessica, in your example or your question, the holidays will just kind of bleed off your profit because they don't get charged to a job typically. So they end up being treated, even for direct labor, they're treated almost like an overhead cost, even though they really aren't. So they're not job specific. So anyway, labor burden is an important thing to understand and know how expensive labor really is. It's more expensive than you think. Okay, let's go on to the next one where the type is even smaller. So this is your third tab in your Excel file. And what this is from the WashDOT manual on how to calculate an overhead rate for public service work. So if you have public jobs, and if you're providing professional service to public work jobs, you're going to negotiate a rate for the employee. And you'll have an hourly rate, and there'll be a profit in that. But then you also typically can charge an overhead per, well, it's a percentage of the direct labor, or it's a percentage or a dollar amount per hour that you're charged for the employee. So when you do this, what you've got here on this sheet is an extract from your P&L. Notice we're spending a lot of time with the P&L, like this whole class, because that's your main operating statement. That is what tells you make money or not. Now, there's no revenue on this calculation. Everything is a function of direct labor. And remember, direct labor, not overhead. Direct labor is the direct labor, the people working on the job. They're the job cost. And what you do is you calculate a percentage overhead, percentage of direct labor. And so in this case, all the labor burden on the direct labor, so taxes, benefits, all that stuff goes into the calculation. That's the fringe, the top part of this worksheet. And then you've got general overhead. So now you've got indirect labor. You've got almost everything else in your business that's overhead. Almost. So there's some exceptions, things that have come out. So charitable donations, marketing costs, any alcohol, any gifts. There's a limit on the amount you can include as far as tax preparation fees. But most of your business costs will go in and become part of the rate you calculate for overhead. Again, it'll be a percentage. In this case, the adjusted percentage down here is 116.19%. These vary a lot. I've seen over 200%. I've seen under 100%. But this one is pretty typical. And the correct calculation of this can mean a lot of money for your business. It's over 100%, so it's more than they're paying for the employee directly. So the public works or the agency running this job is paying for the employee, and they're paying an overhead rate to the business, which is, basically they're reimbursing you your costs. Now, if you can't calculate an overhead rate, or your rate is small because you're a very small business, or you're running your business out of your home or something, you can use a safe harbor rate with most agencies of 110%. But you got to get that pre-approved. And if you do an overhead rate like this, you typically have to have it audited each year. It can be audited by a CPA firm. If you're small enough, you might be able to get it without an audit. Once you get to a certain size, you need either a CPA firm or some of the state agencies will audit it for you at no expense. I can't remember which agency will do that, but I know there's one, if it's WashDOT or if it's somebody else, but they'll do the audit and certify the rate. These are usually done annually. You have to do a new overhead rate each year. So it's something that can make a very big difference to you as a business owner in your profitability. It's something you need to understand. You have a tax preparer, a CPA that can help you, have them help you make sure you understand this. There's a lot of money at stake. Or call me, I can help you too. This is not what I usually do, but I can do it.
David, so Tamara from the port just made a comment. She said that on her end, she sees a lot of hidden cost for her work. It's mostly badging. So Tamara, would you like to unmute yourself and share with us your experience?
Badging.
Yeah, sure, badging. And at the port, badging can cost, around $300 per person, as well as the time that goes along with going through the testing process, because there's depending on where you're located or where you're going to be working at, you actually have to, there are different levels of badges. I have a red badge, which means I don't drive on the airport. But if you do have, if you end up with one of the blue badges that allows you to drive on the airport, that alone is, it is like $300 something dollars. Then there's a couple hours it takes to go through testing, and then there's some other fees that I don't see because I'm an employee. But then it takes a few weeks to a month for you to get the clearance for that person to work on the sites without any escort, as well as the insurance for that worker. If you've got someone that's going to be driving on the, let's say on the airport side of the facility, the insurance alone for the car is around $10 million for CGO. And so, and auto insurance. And so, you're driving around planes, and planes are pretty expensive to fix if you happen to crash into one or back into one or something of that nature. So those are costs that, we expect to have built into the overhead rate, which, you do have insurance listed there, I'm sure. Mm-hmm. That can be an issue for people. Thank you.
Well, it just seems like, all those things you mentioned, if somebody's providing badging to the port, and I don't know if you guys do it yourself or do you have a contractor do it, but there's a lot of costs there. Do you have any idea what it costs per person? It must be over $1,000.
I would say that's a good rough estimate. Yeah.
Yeah, boy. Yeah, that's expensive. And that's a good point that I see a lot of people just underestimate their costs. It could be that just being a business owner, you have to be an optimist by nature or you'd never do it. And you just tend to think you're going to make money. The costs, you kind of tend to forget them. And invariably, the costs are higher than you think. And you look at them, you just go, how could it possibly be that high? And you dig into it, and sure enough, it is. And I bet that's the same at the port. If you actually dug into this badging, it might be shocking to see how much it costs.
Yeah, and those are, and that is actually an unreimbursable expense. So you need to have that built into your overhead when you're
In
doing
the overhead rate, okay.
And it, as well as if you're, so that's just at the airport, but if you're doing any work on Seaport, you've got to have the TWIC card. And I'm not familiar with how much that costs at all. But, you know, then also if you're working on the water, if you've got to have people in boats or whatever, or some kind of a vessel, you have to carry vessel insurance, which is very expensive again. And
Yep.
so, you know, those are things to keep in mind when you're pricing things out. But, you know, the port does like to negotiate its rates, and as much, you know, we're a public entity, and so we do need to try and get the best bang, but we also don't want firms going out of business working for us. And so that's something to, you know, keep in mind. Make sure when you are pricing things out, take a look at the firm input form that I just sent out. It's or that's in the chat. That will give you an idea of how the port looks at pricing, or how we start to look at things and what background it is that we use to consider what a fair and reasonable price is. So that should be informative to people, and it relates directly to what you're talking about. So
Okay, great. Yeah, thank you. So let me just say, for a business owner, profit is good. It's good for so many reasons. It provides positive cash flow, will typically follow. It will solve most, not all, but most of your financial challenges. It'll drive your enterprise value, but most importantly, it gives you choices. The thing with profit is you can give it to the employees, you can do more training, you can buy more equipment, but if you have profit, you have choices. When you're a break-even business, the problem is you're struggling, you're trying to make payroll, you're trying to meet your obligations, you have no choices. Everything is always stressful. It's just not a good way to live. All right, so let's talk about some key learnings from today. I hope everybody learned to read a P&L or an income statement. Again, income statement is the proper term. P&L is kind of the colloquial term. I hope you learned the difference between a direct and indirect cost. I hope you learn to calculate break-even point. If you're a small business owner, that is important. I hope you learned a little bit about troubling poor profitability, which is kind of my bread and butter. And this is what I do, is look at financial statements. Usually they're a mess to start, and then we get them fixed up, and then we have some information, and we can base decisions on that. And then we can troubleshoot profitability. And if we have good statements, good profitability, good cash flow, then we can get on to the more fun things like growing the business and stuff like that. We talked about the true cost of labor, which is shockingly high at times. We talked about pricing professional services and the rules of thumb that make that pretty easy if you can get those rates. And then we talked about the overhead rate, calculation of an overhead rate for use in public works jobs. So at this point, let me open it up for any further questions.
I have a couple.
Yes, sir.
All right, on that last spreadsheet, when you went from the total overhead costs of $800,800 up to the 1.045, where did the extra $245,000 come from to take it from a total overhead cost to a total indirect cost? What was that extra line? I think I missed you saying that.
On that last P&L, I think it was, wasn't that the gross profit margin?
Is that what it was? Okay.
I think so, yeah. There was kind of a, they had deficient gross profit margin, but they did have positive gross margin.
Okay.
I think that's what it was.
And then when you're calculating under your assorted overhead expenses, things like rent in particular, is there any given rule as to which jobs you want to bill that to as far as keeping it under control? Like, do you want to make sure that you put all of your rent expense, for example, into the biggest job that you have on file, or is it better to try and distribute it amongst the different things that could come throughout a period? How do you go about that? What's the reasoning you use when you dig in there?
So when you do an overhead rate for public works, it's for the company. So you put all rent in, all of your expenses in general, except those that are specifically disallowed. And then that overhead rate is used on all your jobs. Now, some jobs won't have a rate. Some jobs will have a rate from 1 year and they'll use it for multiple years. But typically, you're going to use that overhead rate on all jobs in all years. And so that rental rate isn't allocated specifically to jobs, but it becomes a component of your overhead rate.
Cool, thank you.
Other questions?
So David, I have a quick question.
Yes.
In looking at the additional burden, particularly in the last couple weeks on COVID regulations for businesses with over 100 employees, for unexpected burden as part of your employee costs, what kind of guidance can you give these, which, you know, they're still small business, but some of them are bigger than others, you know, on how to navigate this whole thing?
Wow. You're not making it easy on me, Leslie.
Yeah.
Well, you know, as far as compliance costs with COVID, usually most costs will end up in a line item in your P&L, in your expenses, in overhead. And so those are going to be higher. They're going to be just a natural part of doing business. And they'll be just overhead expenses. But you've got the other thing that you alluded to earlier, and that is a deterioration of your top line revenue. And there's really not a way it's recorded. You're just not billing as much revenue. And so it's going to hurt your P&L. It's going to hurt your bottom line, that net income in any case, but it really isn't quantified in an accounting system if it's deterioration of revenue. So it's a tough deal for business owners right now, and particularly facing, you know, do they go back in the office? Do they stay working from home if that's an option? Do you have a vaccine mandate or don't you? A lot of you now with government jobs, the vaccine is going to be mandated, and you're going to, if you're a business owner, you're going to lose some employees. I mean, some people feel strongly enough about it, they're going to leave, and the problem is the shortage of skilled labor in virtually every field, which I just can't seem to get my head around that, why that's occurring, but it is, as is, you know, the material. You know, if you have a restaurant, you can't get meat, you can't get chicken. I guess it's just supply chain disruption. And it's amazing how every aspect of our lives have been affected. So I'm not sure I completely answered your question, Leslie. I'm not sure I can, but I tried.
Well, I sincerely appreciate that. The PTAC offices, the phones are ringing off the hook for existing contractors, you know, on government jobs, you know, on, you know, what their next steps are. And then, you know, when you calculate, you know, the per hour burden, and yeah, you know, all of this comes into the mix, and it's a tough scenario for every single business, doesn't matter if they're small or large, you know, just the bureaucratic red tape and processes. Yeah, look at the increased HR hours that are required to manage this. You know, on top of, you know, if you're doing any federal government contracting, you know, on top of, you know, all the other things like excluded list parties and and hub zone certification, it adds tremendously. So what I anticipate is all the income statements, financials for this year and last year, and probably maybe for next year, are really going to skew any of the financial reporting, for banks or, any kind of lender, with all these small businesses. So, we just have to be there to guide the best that we can. And you're totally correct. We don't have the answers. All we can try to do is encourage our clients to find the best resources they can, and work with capable individuals that will help get them through the next couple of years, and be that in-house staff or professional services such as yourself.
Well, and you're talking mostly about compliance costs, right?
Yeah.
And besides compliance costs, what if you get somebody that gets COVID in your office or exposes some of the workforce?
Yeah.
I mean, while we've been on this call, I got a client who's a contractor, specialty contractor. He's going out to his job sites tomorrow to try to convince all the employees to get vaccinated, because they have so much work, a backlog, they can't afford it to get anybody sick.
Yeah.
And their work crews, they're working in close proximity indoors. If one gets sick, a bunch are going to get sick, and then, they're out of business on that job, and a whole bunch of the employees are sitting. Now, you lose money, that's bad enough, but you could also get people really sick or die from this. So there's some tough issues here we're dealing with.
Well, and the reality is that smart companies, will eventually work through this and be able to move on. Those that are not so smart, it's a little bit of natural selection. They will probably not be able to keep their doors open. But, really and truly, this overview that you gave today is a really terrific refresher for those in leadership that, they need to know how to read the financials, and they also need to see where the red flags are going to come up. And, our conversation today, the red flags are all going to be in, labor costs right now, in addition to material costs, all of these things. Again, it's a Doppler effect on everything about your company. And, those that are bright and well-educated and informed will be able to move on. And the others, it'll be a fire sale on empty offices and, employees that had to be let go. And so this was really a great overview for all of us. I appreciate your insight into this. Thank you.
Well, thank you. It's amazing how a little scrap of RNA has come to rule our lives, but so it is.
Yeah.
And it's not going to be the same when we come out of this. It's going to be a little different world. The COVID seems to have accelerated all the trends that were in place 2 years ago and sort of compressed in 18 months, 10 years worth of progress in terms of technology, witness the way we're all meeting today, not in person. Other questions or comments before we wrap, folks?
I actually wanted to follow up on the one you were just talking about, where the client's out wrangling people out to get a vaccine. Would that, if you're under an obligation per a new mandate or regulation, would that day spent trying to get his workers to go do that fall under a compliance cost? It seems like it's a non-productive as far as the actual production. It's, that employee is now no longer doing the administrative work they need to do. They're no longer doing the other things. Can you file that in as compliance and just say it's an expense to having working for you guys, or is it just, where does that fall? It seems gray.
Well, the CEO is my client. He's the one going out to make the pitch. He's overhead all the time.
No.
But the guys on the job who are direct labor, they're going to be standing still, right? Listening to him for a period. And so they typically have meeting time. And so it may not be billed. Well, if they're charging through their time, that would be non-billable. In this case, they're working to fixed prices. And so it won't change their fixed price, but their cost will be higher, right? Because they're going to have those employees stand there as they get a sales pitch about getting vaccinated.
And then another thing, at the very start of this, we were talking about margins by sector. Well, I looked up margins by sector because we were talking about the averages for professional versus all these different industries, like construction industry, 30%, that stuff. And while we were looking, I saw that New York University, well, NYU, actually runs an annual database that lists all the assorted sectors and their average margins. And I was wondering if it'd be all right to drop that into chat for everybody here, if
Sure.
NYU is a reliable source.
And it's free?
Yeah, it just popped right up off of Google.
Okay, that's awesome. Yeah, let's have it.
They've got global data sets, and these are the numbers run January 2021.
Sometimes there's a challenge figuring out what sector your company is. You may not fit close, but you get as close as you can, or you get 2 or 3 that seem related, and you'll get a pretty good idea of where your margin should be.
Well, you mentioned NAICS codes. That would be the perfect way to do it, is by NAICS code, because there's so many and they're so diverse. But I don't think they ran those numbers.
Yeah, if you had that, that would be good. But even just getting closer is helpful. It's a form of benchmarking. Anybody else?
Well,
Okay.
David, I think that's it for the day. We are very thankful and appreciative of your knowledge and experience that you've shared with us today, and look forward to maybe having you participate again down the road. So with that, I think we'll take a little break. But before we do that, we actually had some additional participants that are from the Port of Seattle that we would like to acknowledge. Tamara Hamill is from the Port of Seattle. And earlier we had Tamika Thornton from the Port of Seattle, and also Mian Rice was here. And so anyway, just wanted to recognize them as being part of this group today. Thanks, David. Thanks, Tamara, for coming.
Thanks, David.
Thank you, David.
You bet. See everybody.
Good afternoon. My name is Leslie Miller, and I'll be your host for this section of session number 2 of the A&E track of PortGen 2021. So today we have Mr. Andrew Ballard of Marketing Solutions, who's going to give us a strong overview about how to stand out amongst the crowd with effective business development and marketing strategies. That's a mouthful. So, and with him, I'd like to acknowledge the Port of Seattle principals that have been with us, Mian Rice and Tamika Thornton and Tina Boyd and Tamara Hamill. They have all been part of our program today, and we just want to acknowledge their participation. And so with that, I'm going to introduce Andrew, and he's going to give us a quick overview of who he is and what he does. And then we're going to introduce everybody here on the slate today. So Andrew, when you get done, we will go ahead and introduce, we'll introduce Emmy Burns, okay? So go ahead, Andrew.
Well, I have myself unmuted now. Hello, everybody. It's great to be back with this group. Actually, I think it's a different group every time I've done this, but the goal is still the same, and that is to prepare people to be more effective at winning more government contracts. And so my focus will be on business development, how to develop a unique value proposition, how to develop a winning elevator pitch, and then some techniques in terms of selling to government and non-government accounts. So again, Andrew Ballard, and essentially for 4 decades, I've been in marketing and media, branding, research, et cetera. I've been the CEO of 3 companies. In 2010, I published my first book, working on another one now, and that went really well. That led to an opportunity to teach at the UW. They were buying my book. And so in 2012, I became an adjunct faculty member for the School of Business and just finished my 9th year, starting my 10th year teaching there. And so, you know, I've just been doing this for a long time. I love what I do. We target small businesses. And under that umbrella that I just gave you, under that marketing umbrella, seriously, I have screwed up more than anyone you've ever met. So don't take me too seriously. I've had a very fortunate career path. We launched Marketing Solutions in 1997. My wife and I did. So we're in our 24th year, and knock on titanium, still going strong. 2020 was hard. 2021 will be the biggest year we've ever had. So, you know, everybody, no matter how prepared they are, deals with the up and downs. But I think that's enough of a basic introduction. I'd love to find out who we have in the group.
Well, thank you, Andrew. We'll go ahead and let Emmy Burns go ahead and open up her mic and tell us a little bit about what you do.
My name is Emmy Burns, and I own a small company called Certified Inspection Services, and we provide non-destructive testing services in construction projects. So checking new welds for flaws to see if they need to be repaired or if they're up to code. We've done some sound transit projects, working on rail inspections and some of the weld inspections in the stations and other things like that. So we work in a lot of different industries. And we don't really do much marketing at all. I shouldn't say not much. We don't do any marketing at all. We have a website and it's basically word of mouth. So, you know, I would really be interested in hearing what Andrew has to say to kind of help us kind of get my bearings and push us in that direction. So.
Well, it's great to meet you, Emily, and this will not be a waste of time for you. We're going to be sharing information specific to what you mentioned. I'm curious, since we've got, you know, a small group and time, what percentage of your revenues come from government contracts? I mean, if that's something you're comfortable sharing.
Yeah, I mean, it's not a massive amount. We mostly do private sector, but we work a lot in the maritime industry, so a lot of fishing boats and things like that. But we do work a lot on Coast Guard vessels and at the naval shipyards and things like that too. Okay. So we kind of awesome. All over the place. So.
Well, and what I am going to chat about today is not exclusive to government contracts. It works for public, private, nonprofit. It doesn't matter. We've got about 500 clients, and you know, it's in every sector. So great to meet you. Thanks for being here.
So thank you, Emmy. And next, I think we have another person here from the Port of Seattle. We have Tina Boyd. So Tina, if you would like to unmute yourself and give us an overview as to what you do with the Port of Seattle.
Okay. I'm Tina Boyd. I work in the Diversity and Contracting Department. I am the Senior WIMBY DBE Coordinator. I worked closely with Tamika Thornton, and Tamika Thornton is, first of all, I want to say give a shout out to Tamika, who's going to be leaving us in a few days for Turner Construction. And Tamika has done a wonderful job with this advanced PortGen program. And I want to say thank you, Tamika. I did talk to her a few minutes ago, but she's not going to be far. Also, I want to personally thank the Northwest Small Business Transportation Resource Center and the many other partners and consultants that are involved in this training program. I want the businesses to take advantage of this unique opportunity. And I said some of this in the chat earlier, to please come prepared with your questions. Because we provided this platform here. You're going to have an opportunity to speak with the procurement staff from the different agencies, and they are the experts. Some of them have been here, especially here at the port, for a while, and I may be familiar with some of the businesses in the classes because I give general PortGens on how to do business with the port. So I look forward to meeting many of you, and some of you, all of you. And if you have any additional questions, I will be popping in and out. I do participate in community events, and I know all of you know about the upcoming Regional Contracting Forum. So therefore, I hope to see you soon. Thank you.
Thank you,
Tina, can
Tina.
you share with us which date that is, the regional contracting?
Oh, I'm
forum?
sorry. The Regional Contracting Forum is one of the largest small business events that's hosted. It usually has been face-to-face. And this year, it's going to be webinar style. It will be, it's on our website. There is a flyer. City of Seattle is hosting this year and WashDOT. It'll be on all the agencies' website page. It's currently on ours. So if you go to www.portseattle.org and under the event page, you'll find some information. There will be one-on-one sessions with the agencies. So if you want an opportunity to speak with primes or agencies, you have to sign up for that. So I encourage you to do so. It's September 22nd. Thank you.
All right, thank you. We'll get on to our next introduction, Mr. Andrew Miller. If you will give us a little bit of your background and maybe what you hope to glean from the class today.
Well, I'm Andrew Miller. I run a small business consulting company that's mostly a part-time endeavor, but it's what I do. And I go down and find companies anywhere from I actually had myself a pretty decent sized company come through and ask for consulting because they didn't know how to write a bid for a government contract. But in general, you have some turnover in a business here, you have something that happens over there, and they don't know how to do their books. They don't know how to check their email. They don't know what computers are. And you just go into these struggling businesses and try and help them claw their way back up into profitability. And in general, that's what I do. So I'm pretty familiar, I think, with what Andrew's going to be presenting here. I did even work for a PTAC for a while in Washington State. Spokane, Washington's PTAC arrangement was under the economic development area. So you're working with the chamber and economic development in the same pattern. It sounds like you set up over there, where the chamber and ED were just kind of in the same building. They're all working together all the time. And so I was in the middle of that long enough to be really interested to see what Andrew has to say, because I know that point of view, but I'm a few years out of the cycle. So get up to speed, kind of get back above water myself, because it's been a busy it's been a not busy couple of years when it comes to this stuff. It's just been busy with everything else. I think that's it in a nutshell.
Okay, thank you, Andrew. So we have two Andrews. So if you're going to talk to Andrew today, maybe do a shout out with their last name.
It's that one. We just assume it's that one the whole time.
Yeah. So next, I'd like to introduce Jessica Chang. So Jessica, give us an update on what's going on with you.
So hi, Leslie. So I'm sorry. Do I? What was the question again?
we just want you to tell us who you are and what you do.
Okay, so hi everyone, my name is Jessica Chang. I represent the Small Business Transportation Resource Center. We're here to help small business in capacity building, meaning that if you have any areas that you need assistance, I know that Amy mentioned earlier that she doesn't really do any business development per se. So she's here to learn about tricks of the trade from Andrew. But we can certainly help you, Amy, put together like a capability statement, or even help you perhaps refresh your website. So if there's any thing that a small business would need help working on, we're here for them and we can provide those technical assistance.
Thank you, Jessica. Okay, so Aisha Kadri is the project director for SBTRC. And I should go ahead and give us a little bit about your background.
Thank you, Leslie. Yeah, so I'm the project director here at the SBTRC, and part of what we do as well is run the bonding education program, as well as taking care of this region as far as it goes for the Women in Transportation Initiative. And so my background has been primarily in small business and helping small businesses, from everything from economic development entities to nonprofits, and then, you know, even companies as big as Microsoft and Facebook. So if there's ever a question that you have and I don't have the answer to it, I know enough people to be able to put you in the right direction. And so please don't hesitate to reach out.
Thanks, Aisha. So my name is Leslie Miller, and I am the Olympic PTAC, which is part of the Washington PTAC program. And the PTACs are the Procurement Technical Assistance Center, which are funded in partnership with the U.S. Department of Defense. And our goal is to provide services to businesses, large or small, looking to do government contracting. And we provide one-on-one counseling, we do workshops, we do matchmaking, we do, you know, meet the buyers events. We work very closely on registration, certifications, marketing, how to do market research, and all of the above. And all of our services are always free of charge. And there's probably a Washington PTAC near you. So with that, in a nutshell, Mr. Andrew Ballard, we will let you go ahead and take control, and let's hear what you have to say.
Okie doke. So the three sections that I want to cover today, and just so I'm clear, we're at about 2:47. What's my hard stop, including Q&A?
It is 3:50.
3:50. Okay, so I've got just about an hour for both my presentation and Q&A, and so
Okay.
I'll make that work. So
Okay.
the point of creating a value proposition is to differentiate your company from those competing in your space. We'll also cover how to create just a really effective communication or pardon me, elevator pitch to be better at communicating that difference. And then we'll wrap up with some sales training on really how to close a deal, how to get a bid. And then I'm going to ask that we reserve the end of the presentation for Q&A, especially now that we're managing time here. And so my presentation obviously isn't going to be 60 minutes because we want to leave plenty of time for Q&A. So I'm just going to jump into it, and I'm going to ask that as something occurs to you, please write it down, excuse me, so that you can join us in the Q&A. So number one, creating a value proposition. As I said before, this is all about differentiating your brand or your offer. And this is probably one of the most important marketing concepts. And the best way to differentiate yourself is by developing a unique value proposition. You might have heard it also referenced as a UVP. And a unique value proposition must have three qualities for it to work. Number one, obviously, it has to differentiate your brand from those competing in your space. But the key to this is that that distinction has to be highly valued by your target market. And so it isn't just about differentiating yourself. The difference has to be valued, because if your target market doesn't understand and value that difference, then your unique value proposition will have no shelf life. And then lastly, you want to position yourself as the first, the best, or the only. And in every case, I had mentioned that we've done this process with 500 companies, including government and nonprofit, but we always go for the only. First mover advantage isn't what it used to be, right? With our high-tech world and a high-touch world, you don't have to be the first one in the category to be sustainable, right? I mean, one of the last search engines to the party was Google, and they have a 67% market share. Nobody comes even close to them. So first mover advantage is no longer as powerful as it used to be. And best, I don't even think best is that strong anymore. I don't know about you, but I've recently seen TV commercials where Burger King is saying the Whopper is the best burger, and McDonald's is saying their quarter pounder or their Big Mac, whatever, is the best. And I think they both taste like crap. But the point is that everybody's trying to say they're the best. But if you can say you're the only, that has some shelf life. And that's what I want to demonstrate and show how to do. So essentially, it's a three-step process. The first is you have to identify your core competencies, what you do really, really well. And you do that through a business analysis. And I'll talk about that in a moment. Second, you need to select from that broader list of core competencies only those that are competitively unique. So it's another filter you're running things through. So you might have five core competencies, but maybe only two of them are competitively unique. Because if you do something well and a competitor does something well, that's not going to stand up to a unique value proposition. And then we'll do that we'll talk a little bit about how to study your competitors. And then finally, it's really important to take that shorter set of competitively unique competencies and run that through what your target market really values, what they really cares about. And that's where the power comes in. And you can do that through a simple customer survey. And again, I'll go into more detail on all of this, but essentially those are the three qualities you have to differentiate yourself. That difference has to be valued. And I'm suggesting you position yourself as the only for doing something, and it works really well. There are over 1,000 marketing companies in the Puget Sound, but there's only one that develops research-based growth strategies that accelerate revenue generation for small businesses, and that's Marketing Solutions. And we own that. Our system is trademarked, so we know it's proprietary, and we know that we're the only one that does it, our special system. Anyway, so here I'm going to demonstrate visually the exact same thing I presented through audio and through text. Same three-step process to develop your unique value proposition. We just call it a simple competitor comparison. You identify the set of characteristics that are important within your industry and important to your target market. This is a short set. You might have 7, 8. I've seen some lists that even get into 11 or 12, but just the short set of characteristics that are important in your industry. Next, you're going to evaluate yourself, and then you're going to have one column for each competitor that you're going to compare against. Typically, we say do the top 3 to 5. Doing more than that just isn't necessary. Trying to understand what every competitor is doing is usually a waste of time. What I suggest to our clients is we only focus on the top few competitors that represent the biggest competitive threat. I mean, that they are a direct competitor. And so you say you're going to do 3, you'll have 3 columns over here. So step 1, as I said before, is you're going to identify through a business analysis what your core competencies are. Step 2, you're going to compare that list to what your competitors are doing. So you're going to take those areas that you do really well, and then you're going to compare them to the competition. And then you're going to take so you end up with a shorter list of unique competitive competencies. And then the third step is that you run that through what your customers or your target market cares about cares about most. And so you're going to select that single thing that is different. You do it better, faster. You're the only one that does it, which again is our preference. And or the only one that does it the way you do, and match it up to what customers really care about. So the question I get most often is, well, what if I don't have a unique competitively unique competency that our customers care about? That happens all the time. And it's a very simple process. All you do is reverse engineer the process. You start out with what your customers really care about. Then you take a look at, among what they really care about, what the competition is already doing, and then take a look at what you can do that lines up with the customer need or value, and that you can do it better. So that's essentially it. And again, this is usually where people are writing down or jotting down questions, because if it were a simple process, I wouldn't be teaching this. So again, the business analysis to evaluate your core competencies related to being better at business development and marketing. The simple exercise, and you can do this by yourself if you're a single owner operator, or do it with your leadership team if you have a group of people you're working with. Simply do a strengths and weaknesses exercise. Strengths are those leverageable points that are competencies. Weaknesses are those things that you need to shore up. So it's that short set of strengths that establishes step one. Then after that, and you're going to see that I reverse this, because we always survey our customers before we review our competitors. And the simple reason we do that is one of the questions we ask our customers is, who would you see as a competitor, right? And if you did the competitor review first, then you wouldn't have the insight of what customers care about. But you're going to ask your best customers about their experience with your company, what it is that you really value. What is it that you care most about providers in our category? So what do we do well? What do you value most? And who do you see as a competitor? And then of those competitors that are exposed, and you can do as short as 10 customers. This is called the voice of the customer technique. It's not designed to be a large sample. We typically are doing this for our clients and doing a very small sample of between 10 and 20 of their customers. And then once you have, the top few, maybe 2 or 3 competitors that your customers say that they think of, then you're going to study those competitors identified by your best customers. And the simplest way to do that is simply review their websites and to see the products and services. Most of them are not sharing price. But if you want to get into a really deep competitive study, what we do for our clients is we do secret shops. We stage a scenario whereby the competitor thinks that we're going to be a customer. And that way you get much more information than you would just reviewing the website. So here's the messaging sequence. First, you develop your unique value proposition. I'm going to show you examples as the first best, and I've already made a case for being the only in your category. And I say here a subcategory. If you can't be the only in doing your category, create a subcategory you can own. We developed a subcategory using the Six Sigma technique of voice of the customer. And so that's how we own our subcategory. Anyway, so you figure out something unique that you can do and create a subcategory and own it. In the branding world, we call name it and claim it. Then you're going to create kind of an intriguing tagline that emotionally connects your position to what your audience really cares about. And then you're going to develop a short set of key messages, typically only 1 to 3, that really communicate what's of the most interest to your target market. So here's an example. I'll do a quick case study of a brand we all know Geico, and their unique value proposition is kind of twofold. One, lowest cost insurance, and next, the fastest response. Well, they got this as the two most important values of the customers. They want, a good value, and they found in their research that that people with insurance were very hesitant to switch carriers because they thought it would take too long, or they thought it would be a hassle. And so they developed what we all know as their tagline, which is "This goes forever," but 15 minutes can save you 15% or more on your car insurance, right? Now, here's the key word. So the 15 minutes deals with the fast response. Save you 15% or more deals with that low cost thing. The reason they can get away with this is they said that they can't, 15 minutes can save you 15%. They don't make a promise. And the fact is they're nowhere near the least expensive insurance carrier. In fact, they're probably in the middle of the pack. They spend about $800 million in advertising every year. And if you want to know who pays for that, you've probably already figured out it's their customers. Then they have a couple key messages. Remember, I said kind of 1 to 3. Geico's been saving people on their car insurance for 70 years. Get a free code at geico.com. Geico's been saving people hundreds on their car insurance. So what I want to do right now is to show you a quick TV commercial. Hopefully the technology will allow us to do this. Zoom slows things down, so we'll give it a try.
Geico's been saving people money on car insurance for over 70
Well, there's our Zoom technology.
years. And who doesn't want value for their dollar? Been true since the day I made my first dollar. Where is that dollar? I got it out to show you.
Was it rather old and wrinkly?
Yeah, you saw it?
Fancy a crisp?
Geico. 15 minutes could save you 15% or more on car insurance.
Okay, so you get the idea, and I'm, it did stutter. Unfortunately, that happens with Zoom, but they were sharing the key messages, even though it was kind of broken up. But that kind of gives you an idea of how that UVP plays in the real world. So hopefully you've jotted down some questions on how to develop your UVP, and that lays the foundation for creating a very effective elevator pitch. To me, an effective elevator pitch is followed by a question. My elevator pitch is only 9 words. I always suggest your elevator pitch should be less than 50 words. So a sentence or two, something really simple. But our 9-word elevator pitch is we develop research-based growth strategies that accelerate revenue generation. And 9 times out of 10, when I share that with someone that I've never met before or at a networking event, 9 out of 10 people say, "Really? Well, how do you do that?" If your elevator pitch is followed by how do you do that or a question, that's a darn good elevator pitch. So the point is that you want to very succinctly communicate your value proposition. And the reason we call it an elevator pitch is that you want to be able to do something within a few floors, right? You're not always in a 34 or a 30 to 40 story high rise. I say your elevator pitch has to work within 3 floors. My 9 words work really well. So let's take a look at how to do that. This is the resource that I've already provided Jessica, and she's going to provide to you. I've actually developed a worksheet. So you're going to have a tool that you can do, but use, and I'll demonstrate that in a second. But it's a 6-step process that works really, really well to develop a very effective elevator pitch. First, you need to describe your ideal customer. Who is your target market? And I can tell you right now, if you're trying to, do everything for everybody, you're not going to be very successful at it. I always suggest you specialize to one specific or a few specific target markets. Number 2, and I'm going to show you an example of how all of this works, but you want to create an attention getter to pique their interest, to set the hook. So, there's a difference between process objectives and outcome objectives. Our process is that we develop research-based growth strategies, but that's not the hook. The outcome objective is the hook, is that we're going to accelerate your revenue generation. That's what they really care about. And I've been using that hook for over a decade, and I can tell you that it works really well. I haven't had to do any marketing or selling for probably over 15 years, because most of our business, 95%, is all referrals. Our vendors or our clients referring us. And so it's responding to those people, who are interested in what we can do and how we can help them. And so that really makes the process faster and much easier. You also want to define who you are and what you do. Essentially, that's the function of a mission statement. Number 4, you're going to explain what is special or different about you. Essentially, that is your unique value proposition. And we've already covered that. And you've got the notes that I think it was Jessica or somebody already emailed out that show you all of these slides. And of course, we'll do our Q&A. 5, you want to state what you want to happen next. In every situation, whether you're distinguishing yourself from a marketing perspective or trying to close a deal from a sales perspective, you always have to have a call to action. That defines what you want to happen next. And then the final step is just putting those first 5 steps together, and that's what puts together your elevator pitch. So let me show you an example. So this is actually how we filled this thing out many, many moons ago. So you're going to describe your ideal customer, right? Target market. And this should be just really short phrases. You're not going to write a book for each one of these 5 different steps to create that elevator pitch in step 6. So all we wrote was, we focus on serving small businesses who want to grow. I think I wrote that in the early 2000s, and it hasn't changed. That's who we care to serve. Create an attention getter to pique their interest. Again, setting that hook. We literally asked the question, do you have any interest in accelerating your revenue generation? And I can tell you that 97 out of 100 people that we talk to say, yeah, of course we are. We'd like to make more money, make it faster, maybe reduce our cost of making that extra amount of money. 3, define who you are and what you do. Essentially, that's the mission statement, right? Marketing Solutions develops research-based growth strategies. We actually develop and implement them. But I'm just showing, I want to demonstrate how easy it is to have 1-sentence responses to all of these. If you spend more than 30 minutes trying to put your elevator pitch together, you're getting stuck and you're putting too much time into it. Or if you're not able to answer all these questions, then you've exposed, I think Emily talked about it before, that she hadn't really done much marketing. She's kind of looking for this. So she might get stuck on some of this. She might say, well, geez, I know who my target market is, but I haven't really got a good hook. And so for her and from others, it may take a little bit longer. But essentially, if you're struggling with any of these first 5 steps to build your full elevator pitch in step 6, then you're exposing a gap that you need to bridge to be highly successful in winning more business, winning more bids, generating more, doing business development and converting on more bids. But it really is this straightforward. Explain what's special about you, your unique value proposition, and everything we do. I've already shared that we develop research-based growth strategies, and the fact is 100% of what we do is data-driven. And so that just simply eliminates the guesswork. 90% of marketing programs for small businesses don't work. It's because they haven't bridged the gap of all 5 of these important attributes to be the most effective at communicating. And we use the elevator pitch to communicate. But someone says, well, how do you do that? Well, we've got a data-driven approach, and it eliminates the guesswork. We don't guess. We validate our strategy before we ask our clients to invest in it. I mean, it's a pretty short conversation, but as you would expect, I'm not only the hair club president, I'm a client. we actually I actually live every day what I preach. And then 5, finally here, state what you want to happen next, the call to action. And for us, I suggest that we meet so I can demonstrate our proprietary system. And we branded it, we've trademarked it. This happened over 20 years ago. Our system is called the MAP system. And MAPS is an acronym for Market Analysis Positioning System. We're the only ones that do it. And we're the only ones that can because we trademarked it, right? And by the way, we don't suggest to a lot of our clients that they spend $5,000 in 3 years trying to trademark to get the little R insignia like you see on Microsoft and all the big brands. All you have to do is put the little tiny TM to the right side of whatever that name of your program or your product is. And all you have to do is prove when you started using your trademark process. There's no cost to it. And the way we do it with our clients is we just have them simply take out a really tiny ad in a daily news or even a weekly newspaper, not to spend a bunch of money, but one common denominator that all newspapers have is that they have the date on every page. And so you do this little tiny ad, spend $100, a couple $100, whatever, and go buy 5 of those papers and put them in a safe deposit box. Oh, we're using that. They can't. And you judge the trademark court of law. All they care about is who used it first. You show the newspaper, well, no, we used it 3 years before they did. And it's really simple to determine if it's trademarkable. You only have to do 3 things. One is you go to the office, Washington, D.C., go to the Office of Trademarks and Patents. And if you just type in the Office of Trademarks and Patents on your Google, you're going to go right to their website, and you can check to see if the way you've worded it, if there is a trademark on it. And if there isn't, keep going. The next is there a URL available? Go to GoDaddy and type in the URL. And then finally, we go to the Washington State Secretary of State's office to make sure that there isn't a company that already has a UBI number with that name. Pretty straightforward. We just did this for an IT company a few years back. We created the IT safeguard system based on the voice of the customer. And all we did is made safeguard one word with a capital S and a capital G, but we took the U out of the guard. It still reads safeguard, but that made it trademarkable. So sometimes you have to get a little creative. And then finally, put the whole thing together. And this is only 35 words. Essentially, if you have any interest in growing your business faster than at the current level, we can develop research-based growth strategies that will help you accelerate revenue generation. And within 10 minutes, I can show you exactly how we've done this successfully for over 400 companies and how we would apply it to you. And I'm just telling you that this elevator pitch, I just followed all 6 steps and it works. It works really, really well. And so this is the sheet that you are all going to get right after this. You'll get it emailed to you. It's just very simple. We have trademarked it. We've done the copyright on this, but it's really, really very straightforward. You just go through this, and as you type in to each of those 6 steps, the box will expand to your typing. Okay, so it's macro enabled, makes it really simple. Fill in for each of these, and then you put it all together in this 6th step. And so the instructions are there. It's just really straightforward and a really simple process. And so you're going to get that right after this. How am I on time? I'm actually doing really well. I'm actually a little bit ahead of schedule. That just means we'll have more time for Q&A. So the third element I wanted to talk about, we've covered how to develop, the 3 steps to develop your unique value proposition. We just went through the 6 steps to develop an elevator pitch. And of course, step 4 of that was using that unique value proposition. So you've already kind of done that. But what about when you get into a selling situation, and especially if it's a bid? And everything I've shared works really well, whether it's a government contract or a bid. And, they're always sending out RFQs and RFPs, RFQ, requests for qualifications. That's on the front end of a big project. And then RFP eventually gets to that. It'll start off with the RFP if it's smaller, and that's request for proposal. And I'm sure many of you know about that and how the government works with bids. But what I want to talk about in this last section is how do you effectively qualify the job opportunity and close the deal? And so this really moves us from marketing into sales. Now, sales is one of the many elements under the large marketing umbrella, but this is very specific. So what I want to do is show you the 4 stages of sales. The first stage is to identify, and it has 2 sections. And by the way, I've written a book about this, or a workbook rather. And so this is something I've been teaching. I started teaching this in 1983. And, again, I said I've been doing this for almost 4 decades. And I published our sales training book in early 2000s. Anyway, so identify means 2 things. A, you want to identify responsive and profitable prospects, right? You don't want to identify a target market that's not responsive to your selling proposition. And they have to be a target market that's profitable, right? You need to make your fair margin on the work. Otherwise, you can't sustain your business. And the second part of identify in the first of these 4 stages in the sales cycle is to distinguish yourself as the qualified provider. And for that, you need a good elevator pitch. Well, guess what? We just covered that. I implore you to fill out that worksheet, and you'll be amazed at how easy it is. It may expose some gaps, but you'll end out with a really good elevator pitch. So the first thing we have to do is make sure we're targeting the right market. One that wants, needs, desires what it is we're selling. They're responsive to our value proposition, and that we can make a fair profit, right? Okay, so number 2, and of course, then we've got to distinguish ourselves. That's identifying ourselves as a qualified provider. Number 2 is to qualify prospects. And this one's a little bit more difficult. In fact, if you're really good at qualifying, you're going to be good at pretty much everything else. But you're qualifying prospects for their I say style. And by style, I mean their communications and their style and kind of their personality, right? We've all seen the different DISC quadrants, like there's 4 different personality styles. The truth is we all have part of all 4 main styles, but we're dominant in one, or we're really weak in one of the others. And so we need to know what their personality and communication style is, because there is a technique called mirroring. And I'm a pretty high wire guy. I've got a very active metabolism. I'm purposely speaking slowly, but I'm usually talking like this, bouncing off the walls, right? But if I'm working with a type B, pragmatic, analytical person, if I'm working with an analytic and I start talking at my normal cadence, their eyes are going to roll in the back of their head and they're going to say, somebody shoot me, get me out of the room with this guy. So with those people, I don't act as animated. I slow my cadence and I start talking in analytical terms. And the thing that I really want to talk with you about is our data-driven approach and how we validate that data before we suggest our clients invest in it. And so that's very different than my communications approach. And so the idea is once you've determined their style and their personality, are they, upbeat? Are they very stoic and analytical? Are they, friendly and care about, relationships and maybe they're emotional? Or are they more visionary, right? I want to see what the end product is. You need to adjust your communication style to mirror those. That's the important part of that. But you need to really understand their situation. What is their current situation? What problem are they trying to solve? How are they wanting you to satisfy their needs? There's wants, needs, desires. Need is something that has to happen. Want is would like to have, a desire. So a need, okay, well, I need my furnace to work. Want. Um, well, I'd really love to have that new dining room table. Desire. Well, geez, I'd love to put a hot tub in the backyard. So you see the difference there. There's a difference between wants, needs, and desires. We certainly need to know their budget. We need to know their timeline. And this is something that a lot of people don't talk about in communications. And that is, you need to know who the influencers are, who is part of influencing the final decision. And I'm always, and you'll see that I'm always asking the question, who else is part of the decision-making process? I'll get into that when I show you some key questions that we ask that work really well. The third step is to demonstrate. You want to demonstrate your solution by aligning the features and benefits of what you do to your prospects' wants, needs, and desires, right? Your solution has to fit their need or their pain point, right? It's got to be a direct connection. That's usually the easiest step, by the way. And then finally, what most people think is the most difficult step because they're afraid to close actually is the easiest step. And that is to convert prospects into customers. We've heard it before as closing the deal. You've got to address their needs and concerns, answer to any of their objections, and don't be afraid to ask for the order. And I'm going to show you exactly how I do it. But I really want to focus on doing the deeper dive in how we qualify and how we convert. I think that you're in business because you know how to demonstrate the value of your business. So let's jump into that. First of all, I don't know if you're all registered with WEBs. I would assume you are. If you're not, this is on one of the slides. Go to des.wa.gov. And when you go to, if Zoom is going to let me go to the site, you want to scroll down to the middle of the site and click on the purple web. And once you get to the web page, all you do is click on the vendor registration system. And then you just fill that out. I'm already a member, so a couple times a week, I get bid requests through the state, which can be city, county, or state. I only get them for areas that I care about, okay? So that's how simple that is. If you're not already registered with WEBs, you definitely want to be if you're going to do government work. Most of the people that I work with, I do a lot of people in construction. AEC is a big sector for us. We're doing, that stands for architects, engineers, and construction. We've got a ton of construction. We also have a lot of clients in manufacturing, engineering, and things like that. So again, I've screwed up in this industry before, so I've learned. But if you haven't signed up, do. It's a real simple process and it's free. So qualify. So whether you're interviewing, over the phone or through Zoom or toe to toe, it doesn't matter. But interviewing is person to person. A lot of times though, with government bids, all of the correspondence is through email, and they would prefer to have it that way, unless you have a relationship. And that's how I've developed a success. We have a couple counties that are clients. We've done work for the state, and we've got 15 cities just in the 2-county area in Snohomish and King County that are clients of ours. And most of those clients have hired us over a half dozen times. And so it happens with great frequency. So based on creating your proposal or responding to the RFP or the bid request, you have to really understand the objectives and the deliverables, right? And so I need to reveal the budget parameters. Not every RFP has a budget. And I know a lot of people that will respond to RFPs that don't have a budget or a range. I don't. I never do. Never once early in my career did I set something up that didn't have a predetermined budget where we won the bid. Because essentially when they don't have a budget, they're buying the lowest cost provider. And we're a premium brand. We're not the lowest cost provider. We deliver the highest value. We deliver results. If you care about ROI, you don't care if I charge you $1 million. If I give you 2 million in return, it's not what I charge you, it's what I give you back in return. So we need a budgets or we don't play. I'm not saying that you should not do that, but I'm telling you that the last thing, unless you are the lowest cost bidder, that doesn't usually go well. To determine their readiness to buy, what's the best timing? Have they set a deadline, or are they just on a fishing expedition? If they're on a fishing expedition, again, we don't play. We say, hey, listen, if you're thinking about doing this in a year or two, come back to us then. Because I can't guarantee our rates will be the same in 2 years. Oh, come on, can't you just give us an idea? No, I can't. Come back to us when you're ready to make a decision, and we will give you everything you need to know. Next, find out who else they're working with, especially, or if they're considering. If it's a government contract, legally, it's a public process. Legally, they have to tell you everybody else who's bidding. And so if it's all email, I'll send an email, and usually with RFPs, as you know, they'll have a deadline for questions, a deadline to submit the RFP, a deadline for making a decision. It's usually pretty well organized there. But, you know, essentially, I want to know who else is there. So in the email, I say, what's the budget and who else is going to respond to this RFP? Who already have done? Also, ask for the single most deciding factor. This is one of my favorite questions. If you had to choose between brand A and brand B, what is your single most important deciding factor? You can bet my proposal is going to be focused on that deciding factor. I also always find out if there are other decision makers involved. And then the last thing is, what's involved in your decision-making process? Sometimes they will define that in the bid. They'll go, this is our scoring matrix. And in fact, you know, really good government bids will always include that. But remember, we're not doing all government bids. Emily does a lot of private work, right? So all of these questions are important for private as well. So next, we're getting down to the end here. Convert, closing tactics. So you need to bridge the demonstration from the close. And I always use from the demonstration to the close. You have to do what's called an interest segue to convert the prospect. And so I use a trial close. After I've done my entire presentation, I'll say, did I address all of your needs in my proposal? And most of the time they're going to say yes. And I said, is there anything that I haven't covered that we need to talk about before you make a decision? Well, yeah, I need to know more about this. And if they say no, then I go for the close. I ask for the order. I'm calm, I'm confident, I'm not cocky, but I always maintain eye contact. We have clients in all 4 time zones. So I do a lot of Zoom. I had a Zoom Pro account years before there was ever a pandemic. So we're used to using it. I'm calm. And I use a really cool technique. There's like 24 different closing techniques. My favorite is the no that means yes. This works so well. So if I said, did I address all your needs up here on the trial close? Yes, you did. Was there anything else that I didn't cover that you'd like to discuss? No, I have everything I need. Great. Well, super. Can you think of any reason why we wouldn't move forward on this project? If they say no, then you've got a new client. If they say yes, that means that there is an objective they've been hiding from you. Anyway, so another important technique when asking a closing question, this is not critical for the trial close, but when you ask the closing question, like, great, is there any reason we can't move forward? It's easier for people to say no than it is to say yes, and that's why it's an effective technique. I didn't make this technique up. It's been around for 100 years. But silence after asking a closed-ended question. So the idea is, once you ask a closing question, button up, because the next person who talks is going to be the owner. Whoever speaks first usually becomes the owner. I cannot tell you how many times I have been working with green peas in sales, and they'll say, great, can we go ahead and earn your business on this? And then there's this long pause, and they get nervous, and they fill in the dead air with, you know, we do this and this. It's a perfect fit for you. they're pedaling backwards. And so the old adage is, after you ask a closing question, whoever speaks first usually becomes the owner of the product. And I've been doing sales training for almost 40 years. And I can tell you, I have seen a lot of inexperienced salespeople end up buying their own product. The point is, when you ask a closing question, just shut up and wait for an answer. Seal the deal. Once the prospect commits, yeah, we're ready to move forward. If you are face to face, I always go for a handshake. I say, I'll get the contract over to you right away. If there's actually a signature line on our scope of work, which we do for our smaller projects, I go, great. You can see I've already signed this. Give me your John Hancock, and we'll start on Monday like we just agreed to. If in fact it's over the phone or through Zoom, say, great. I'm going to go ahead and send you all the paperwork. I will provision my team to start this project on Monday. And so you're actually, making it a strong commitment. So that's how we do it that way. I also want to share something that's kind of cool. This is a little bit more advanced sales training that I got from a mentor of mine back in the 80s. And he told me, and he's right, that there are 3 unasked questions. So these 3 questions rarely ever get asked. But here's the deal. If you don't answer the questions that aren't asked to the prospect's satisfaction, they're not going to buy. And so that's why I'm sharing them with you, because you have to address them in your demonstration or in your presentation. What's in it for me? We've heard that before. It's with them. What's in it for me? And so essentially what they're asking is, will your product or service, is that going to lower my risk, or is it going to increase my gain, right? What's in it for me? If I buy your product or service, am I going to get something out of this? And by the way, almost every buying decision is made either to lower someone's risk. I use Geico, that's a lower risk, or to increase their opportunity for gain. And when I get hired, it's about increase their opportunity for gain. Gaining what? Accelerated revenue generation. But I also address reducing their risk, because if they invest in the wrong programs or in strategy that hasn't been validated, that puts their capital at risk. And that's how I distinguish myself. We're not going to put your capital at risk, and we're going to generate the results. Well, can you prove the results that you've developed? I said, yeah, here's a spreadsheet. Our average net return on investment's over 400%. It depends on the industry, but we've done over 1,000%. Here are all the studies. In other words, we've got 24 years of data that we can show, and we do share. We redact the clients' names because we don't have any permission to use our clients' names, but it works really well. The second question is, why should I listen to you? And so this really goes to trust. That what they're really saying is, can I trust you? Do you care about me? And more importantly, are you going to be there when I need you? Or are you just selling me and then you're going to be gone? And so you need to address those things. And, given the fact that I've been doing this for 38 years and my company has been around for 24, and the fact that I'm a published author that does well, my TEDx talk, blah, 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 and that I was hired by the University of Washington School of Business. I teach one business and marketing class each quarter. I can only teach one class a quarter because I got a business to run, right? That's where Sandra comes in. She's actually our CEO and allows me to do a bunch of fun stuff like these webinars. The last unasked question is, why should I buy what you're selling now? And this is more important to non-government contracts, because if you're getting an RFQ or an RFP, a request for bid from a government contract, in most cases, they're ready to move forward. But I can't tell you how many fishing expeditions I've had people do, just try to find out, what we offer, how we offer it, what we charge. And I will give them all that information if, in fact, they are ready to make a commitment when they find the right solution. So what they're really asking is, now the best time? Am I better off waiting? And some people say, this is the best time to buy from us because we have some openings on our schedule right now. And so we've incorporated a 15% discount. Well, we're a premium brand. We go the other way. And I said, well, the best reason for doing this now is because we can work you into our schedule next month. You wait another few weeks, we may get booked out for 3 or 4 months. And by the way, it's 100% true. Right now, we're booking for first quarter. We're doing some small projects, starting mid-October, early November. But for our full service map system that I talked about, it's a huge resource drain. And so we're booking all of that for first quarter, but it's legitimate, it's true. And it increases the interest and the urgency. So you need to be able to answer all 3 of those questions. So how do I personally win government contracts? I ask 2 questions for, is this a sole sourced contract? They don't always put it in there. Legally, they're supposed to. What sole sourced means, if you don't already know, and if you do, I'm sorry for being redundant, but a lot of these classes I teach, I might have 50 people and I have no way of knowing, maybe somebody's just a startup. Sole sourced in an RFP means they've already selected a contractor. Never respond to a sole sourced contract. If it's not clear, I always say, is this a sole sourced contract? In fact, what I do is work hard to become the sole sourced vendor. Next is, do you select contractors based on the lowest price or the highest value? If they say we're going for the lowest cost bidder, I go, thank you for being so candid. I wish you a good day and I hope you get a great vendor. And I am out of there. What we really care is the value. Great, then we have a reason to keep talking. So my 3 secrets to winning government contracts: I stay in my lane, I focus on my target market, and my target market is growth. So that's research, that's communications in government, it's like communications outreach. We do a lot of surveys for cities and that kind of thing, but we don't go after every contract. We only go after the contracts that we're real strong at. Next, nurture multiple relationships with every target agency. The Snohomish County has been a client of ours ever since 2006. And ever since then, we have done dozens and dozens of contracts with them. We usually get sole sourced, so we're not in a competitive environment. But we've done a couple dozen projects for human services. We've done several projects. In fact, I've been hired by our county executive. Dave Summers has hired me, but I don't just know Dave, the Snohomish County exec. I know his chief of staff, Lacey Harper. I make sure we stay in contact. We'll go out to lunch. I know several of the department heads. So it doesn't matter who needs the help. I have a relationship. And then give them a reason to sole source your company. And the best way to give them a reason to sole source you is to deliver value and to exceed their expectations. That's our internal motto. And if you deliver value and exceed their expectations, they're going to come back to you time in and time again. I remember once for a city, and this is about 3 years ago, it was a huge contract. And I had done several projects for this particular city, but they were not willing to sole source me. And they had to put it out to bid. And there were over a dozen different people that were chiming in on this. And so I went to the department head and I said, I'm not going to bid for this. I said, this is just, everybody throwing their hat in the ring. I said, if you can't sole source me, then I'm not going to do this. And this individual looked at me. He was director of economic development. And he said, Andrew, do the bid. And he smiled. Now, he couldn't say that I had already been chosen because the city council would not allow a sole source contract. But what he was telling me is you already got the job, but I can't legally list you as the sole source. And so I said, okay, I am reading between the lines. We never talked like that, but I mean, I knew what was going on. So I did it. We got the contract. We weren't even close to the lowest cost bidder, but they knew we were going to do it right. So business development summary, develop a unique value proposition. Oh, I'm good on time. We still have 10 minutes for Q&A. create a unique value proposition, distinguish your brand from others in your space, create a compelling elevator pitch. Remember, that's a succinct way to communicate why prospects should care about you and why you can help them, and sell your proposal to win more contracts based on effectively qualifying and putting together a persuasive case and demonstrating your case and closing the deal. So that is it. You're going to get that. I'm going to stop sharing my screen. My email address is already on the handout you already got. So we've got 10 minutes for Q&A. So unmute your mics and let me have it.
I have to admit, you kind of just blew me away with data there. The list of questions shrank as you went on. Every time I think
Oh,
I'd have a
good.
question.
Okay, great. Oh, by the way,
You
Andrew,
covered.
I'm so glad you said what you said. One thing I forgot, I went through my last slide so fast. If anybody wants to ask me a question offline, if you attended this, I'm happy to give you a free phone call, a free Zoom consult. So I appreciate people, I love to be challenged, but if anybody wants to talk about anything offline, reach out to me. My email address is on my PowerPoint deck and it's free. It's no cost to you. So I am sorry for interrupting you, Andrew. And I'm glad that as we went along, I answered some questions, but I went over so much information, it can be a little daunting and confusing. And I respect that.
Would you be open to, when we do this as a final presentation and it ends up as a YouTube video, would you be okay with me sharing that with clients of mine just as advice from you, or is this a proprietary type of conversation?
I would be happy to help you do that. So as you know, my PowerPoint, it actually has, it's copywritten for 2021. But if you're in this experience, you get to use everything that I shared with you. So the short answer is yes, Andrew, absolutely.
I just think this is a great resource. There's so much. And it's things I've taken in a class in 1993, and something I remember a guy telling me back at a conference table somewhere in the early 2000s. It's nice and concise and just really well put together. The only question I have is how, this is the only one left out of that whole thing. How do you actually realize that moment you realize that it's not a good pitch and you should avoid that particular client and you need to end services or stop selling to them? What is the breakaway in your process where you realize this construction company doesn't want to invest in your product for marketing? I've had the guy that, well, we don't do websites. Well, we don't want to call people. We don't want cold calls. We don't do websites. We're not going to hand out little printed notebooks. We're not going to print pencils. We don't want anything you're offering. How do you decide in your own mind that it's time to just walk away?
Well, I actually make that determination in step 2 of the 4 steps in the sales. Remember, it's identify, qualify, demonstrate, and convert. I actually make that determination during the qualification stage. So I'm able to make that decision very early in the process before I even put together a proposal. And I do it by asking questions. And the questions have to do with trying to connect their need with our service bundle. And if there is not a clear connection, or they really don't need what we do is real simple, those 9 words. We develop research-based growth strategies that accelerate revenue generation. And if they want to do something that's completely outside that, I'll say, Andrew, I so appreciate you giving me time over this Zoom so I could learn a little bit about your company and what it is you need. And you've given me such a great understanding of your current business situation and your objectives for what success looks like. I realize I'm the wrong fit. And what I'll often do is, if I know somebody in my network that can do exactly what they need, I'll say, I'd be happy to email you someone that I trust that actually does what you need. And so not only have I kept myself from doing something that I don't think is a good fit, it might be, I always make them look good. Never make me look good. It might be, it's like, there's just no way in heck that I want to work for this person because of, they're just like me. They're pushy. I don't like them. But I always explain that I'm a bad fit, and I actually will give them a free resource. And that way you leave the engagement on a very positive footing. And in doing that, several times in our 24 years, I've had those companies come back and say, now we need what you do. And because you help me for free, I'm not even going to talk to anybody else. We're hiring you.
That's a slick approach.
Well, it really works. Like I said, I've been doing sales training since 1983 was the first time I did a formal sales training. And anyway, I just love it. It's a lot of fun. And remember, I've screwed up more than anybody you've met. And so you learn from your mistakes. But it was a very good question. And absolutely, use the YouTube, do whatever you want.
Thank you.
My pleasure. I'm glad that you were on the Zoom. Does anybody else have a question? We still have 5 minutes.
Well, actually, I have a comment. University of Washington Foster School of Business was actually one of my partners in the Spokane area for Washington PTAC. And, they put on a series of workshops for certification from the UW.
Mhm.
And anyway, it was an awesome opportunity. And, I participated in that. And it really was such a great resource for my clients. And I don't know if you were one of the presenters here, but
No, I wasn't. And I'll make the distinction. So I accepted an appointment to the University of Washington. I teach at the Bothell campus, School of Business undergrad. So I'm not in the graduate program. I teach undergrad. All of my classes are 400 level. So I have a new cohort of seniors every quarter. And it's a lot of fun because they're all smarter than I am, but I'm not in the graduate. And the reason I'm not, they have tried to get me, I've done guest lecturing for their MBA program, but I can't get paid by the UW to do graduate teaching because I don't have an advanced degree. And you can teach undergrad. And the reason that they know me is because they were buying my book for several of their marketing classes. They actually found me. I didn't go looking for them, but I wanted to make it clear that I'm at the 400 level. I teach undergrad.
Well, that's excellent. So
and I teach at Bothell, right? My gosh, I can get to my classroom in 18 minutes if I don't miss any lights.
That's
So
good.
I was actually, I was one of the first freshman class that UW Bothell ever took.
Oh, you're kidding.
Yeah, that was 2006.
I was going to say, you must have been a freshman at 6 years old, huh?
It was a while ago.
I can't. That's fantastic. UW, anything. I love UW Bothell because it's, but anything university is just awesome. And by the way, I lecture for Wazoo. It's guest lecturing. I actually get paid by the University of Washington for every quarter I teach. But I have taught, I have done guest lecturing on marketing research for WSU Everett every year for the last 3 or 4 years. So I'm agnostic. I love Cougars. I love Huskies. I don't care. Oh, I'm actually guest lecturing next week. Actually, it's on Tuesday next week for SPU, Seattle Pacific University. One of my best friends is a professor there, and I guest lecture for him every year. And it's actually, I'm guest lecturing for him on the 14th. That's next Tuesday, right? No, today's the 14th.
Yeah.
Okay,
Yeah.
so it's next Tuesday, which I believe is that the 21st?
Yeah.
Anyway.
Yeah. Oh, go ahead, Leslie.
Well, I was just gonna thank him for coming and providing such a wealth of knowledge, great resources. And I posted in the chat your after the event Word document. So
Perfect.
everybody has that information.
Well, I know that you got to close down here in a couple of minutes, but I do have one other customer, and that's Emily. Emily is still here. Is it okay if I take 2 minutes to answer any questions that Emily may have?
that was a lot of information. I don't have any questions at the moment.
Okay. Well, you know, you have my email address and you know that you can ping me and I'll be happy to do a free consult and answer any questions you have.
Awesome. Thank you so much.
My
Sure.
pleasure. Sorry for interrupting, Leslie. I know you were trying to close, but I just want to make sure. I mean, I had two customers. Well, I had Andrew and I had Emily. And so that's who I'm focused on serving. Anyway.
And you know what? That's the way it should be. So we're very excited that you were able to find the time today to come and teach us a few tricks. And there's like a million questions swimming around in my head about, I want to open up a coffee shop. How does my coffee shop, differ from everybody else's? Or, maybe I'm a construction company, or, all of those things where, well, there used to be so many of these, but now after the transitions, with COVID, it's kind of weeded out a lot, but
unfortunately,
yeah,
a lot of small businesses were casualties of COVID,
Yeah.
especially in hospitality.
Oh, yeah.
And
Yeah.
just, it's so tough. I've done a lot of free pro bono work and teaching in the hospitality sector, just because, for locals. And just because it just breaks my heart. You got family owned restaurants that didn't have the reserves and couldn't survive. And so I've been teaching folks how to do a strategic pivot. And I've been doing some training, for free, just because I want to help I'm in Snohomish County. I'm in Mill Creek. And so I've been doing some, free pro bono work, just trying to help some local folks.
Oh, yeah.
Because I just feel like it's my responsibility.
Well,
I'm sorry, Leslie and Andrew. I actually have a question. I was wondering if Andrew can address it while we still have time.
go ahead.
So you mentioned the first thing is to provide a value proposition, but if you are
Unique value proposition.
right, if you're a new company getting into public contracting per se, you want to do business with Snohomish County, but you haven't done any work with them before. So how do I find my unique value proposition that I could provide for the county in that regard?
Well, you use the exact same 3-step approach that I shared. And I'll tell you why it works, even if you don't have a track record. Everybody that does, that wins government contract work, every one of us had to start with our first contract. So everybody, now it's to the point where I get a lot of emails and calls, and that's great. But there was a point where I had my first contract. I remember my very first client in advanced manufacturing. I won't explain the company, but it was a Boeing supplier. And by the way, Boeing has been a client a couple times. But the CEO, we were talking about a particular project. The CEO says, well, how many aerospace suppliers have you worked for before? And I said, you'll be my first one. And he goes, what? I could tell he was really put off. And I said, let me explain something about our process. And I said, our system is industry agnostic. These are the results we deliver. And I don't care if you're selling tennis shoes or spaceships. The same marketing fundamentals of segmenting, targeting, and positioning work. And I said, now here's specifically how I apply it to you in the context of advanced manufacturing. I went 1, 2, 3. And he goes, okay, you're hired. So the thing you don't usually have that one-on-one opportunity with a lot of government contracts, but it's the exact same process. It doesn't matter if your entire communications is email or not, you still have to differentiate yourself based on something that they care about. So it's really, the process is first doing that business analysis. What am I really good at? Second, what among the things I'm really good at are the competitors not offering? And the third is, what among those unique sets of competencies that I have will be valued by my target market? And so in your case, what you're saying, Jessica, is what I remember when I said, if you don't have any of that, you reverse engineer the process. So you start with the customer, then you go to the competitor, and then you innovate. And if you want to know how to innovate, go watch my TEDx talk. I actually talk about the formula for breakthrough growth. Vision plus insight plus innovation are what equal growth. And I give examples on how to innovate. So you actually create something. If you don't already have it, you create something that will be compelling, interesting, and of value to the target market you're going after. In this case, for your example, it'd be Snohomish County. So if you're a startup, go steps 3, 2, 1. And if you're in business and you want to do a better job of distinguishing you, or you want to look more attractive to, one of the government bids, then you do it 1, 2, 3. But it works either way. All of us had to do our first government contract. Same exact approach works.
Thank you.
That's a really good question. It's an outstanding question. I'm surprised I've never heard that question before. But you and I have been through this rodeo together many times, so I'm really glad you asked the question.
Thank you, Andrew. Well, with that, unless we have any more questions, I think we will turn it over to Aisha for her little bit here, and then we'll call it a night. So thank you, everybody, and go ahead. We'll hear what you have to say.
Oh, I just wanted to thank everyone for coming and for being a part of this workshop today. Like everyone has kind of touched on, we are here if you need anything. And again, if we don't have access to the answer, we will go and find it for you. So please feel free to reach out to us with any of your needs and register for some more classes.
Thank you so much. Just a reminder, these files are available. So if you didn't get the download, contact us and we'll get them sent off to you. And also, if this is recorded, and we will post a notice when we get it uploaded to YouTube.